All right, so this is technically day 2 of investing in QQQ every single day. Now, I know we just did a video on QQQ, right? And I believe that a lot of people may be put off by QQQ because of its hefty stock price. We are, after all, talking about a price point that is well over $530 per share at the time of this recording, which is a lot of money for the everyday retail investor, right? After all, you know, Americans are having a hard time even maintaining a savings account right now of $500 to $1,000, let alone being able, you know, to be in a position to spend $500 on stocks right now. That's just where we're at. Now, part of that is because of our terrible and abhorrent spending practices, but we'll save that for another video. So the question then becomes, is there a cheaper alternative option to QQQ that we can add to our portfolio that still corners the tech industry of the market and gives us exposure to the greatest tech companies in the country? And the answer is absolutely yes. And that stock is the NEOS S&P 500 High Income ETF. That's a lot. Simply put, the ticker symbol is SPYI, okay? And it has all of the same great tech companies inside of it that QQQ has, and makes it an attractive position for us. So let's take a look at this on stockanalysis.com and a few other factors to differentiate the differences between the two, because you may be thinking, hey, why would I invest in a $500 ETF versus investing in an ETF that has the same positions for a fraction of the price? Well, there are some things to consider when choosing which one to invest in. So let's get to it, shall we? For this first part of the comparison, I am going to etf.com, okay? And etf.com is a free website, a free tool that you can use to compare and contrast ETFs. So naturally, we have QQQ, the Invesco Trust right here, versus the SPYI, the NEOS S&P 500. Now, the QQQ, for one of the main differences is their holdings, right? Because if you go to the holdings, you'll see that though they have nearly the same holdings, with the differences being this is the top 10 for both, okay? So you got QQQ here, and they're top 10, and then you've got SPYI, their top 10 right over here. So you can see some of the same things: NVIDIA, Apple, Microsoft, right? Amazon, Broadcom, Tesla, pretty much identical top 10s, right? So here's where they start to separate themselves though, okay? Let's go back up to their holdings. If you look at the number of holdings right here, you'll see that the QQQ is based on, if you watch the video that I put up yesterday or the day before yesterday, I can't remember, it has the top 100 holdings, okay? The top 100. So that is really where they are bottoming out, if you will, right? 100 holdings compared to 506 holdings, over 500 holdings from the SPYI. So that's a main difference right there. Now, with more holdings in your ETF, that obviously means that you are exposed to a significant level more of volatility, right? Obviously, because you have 400 more positions than the QQQ. So there's that to consider. There's a little bit more volatility, a little bit more risk to consider with the NEOS S&P 500. And that can be a good and bad thing depending on how you look at it. You know, you might consider that and say, well, I would like to have more holdings. I want more great companies within that ETF. So I don't mind holding the extra 400 companies as long as those 400 companies are good companies, right? So if you look at their average daily volume and you look at their assets under management, it's like night and day, okay? It's literally night and day. The QQQ has $307 billion worth of assets under management. Meanwhile, the SPYI only has 2.35 billion. Okay, that is a major difference in these two ETFs. Also, if you go up to the last trading number as far as their stock evaluation price, you'll see the other big difference, and this is why you might choose SPYI over QQQ. You're talking about $538 versus paying $52, right? $538 per share versus $52 per share. It's a no-brainer as to which one is more attractive for the retail investor, right? So I don't know. I might switch up and choose to invest in the SPYI every single day. I haven't decided yet. I'm gonna decide today, and we're gonna invest. It might be SPYI. I might switch over. I might do both. But again, you really only need one if you're trying to corner the tech market. There's really no need to have both. Just choose one, stick to it, and just continue to buy. Now, one of the reasons I may switch over to SPYI is the dividend is a lot higher for SPYI, and we'll get to that in 1 second. But the other part that I want to show you really quickly and talk about is the expense ratio. You'll see the expense ratio for QQQ is 0.20% versus the expense ratio for SPYI, which is sitting at 0.68%. So that's triple the expense rate costs, right? Granted, 0.68, you might consider it's not a ton of money, but over time, it will add up. Over time, it will add up. Again, it's damn near triple the price, the cost rather, of the expense ratio of QQQ. So that's another factor to consider right there, your expense ratio, right? So the charts down here, if you look at the growth, you can see that QQQ has grown considerably more than SPY has, okay? You look at the 1 month, they have the 1 month difference, the 3 month difference, and then the year-to-date difference, which the year-to-date difference isn't that far off. We're talking about a difference of about 8%. But the 1 year, you look at the 1 year and it gives you the real difference right there. So we're talking about, what's that? That's about 8%, 9% difference, almost 10% difference in stock appreciation and growth, right? So now here's the last thing I'm going to take you to. This video ain't going to be long, y'all. I don't want to be long-winded with this. So the last one we're going to go to is the stockanalysis.com, where you can see all the holdings, the top holdings there. Again, it's a lot of the same companies. Also, I see AbbVie there. I love AbbVie stock. You see Johnson & Johnson there. Just a lot of great companies within this, right? So you really can't go wrong. But if you go over to the dividends, you'll see that yield sitting at 11.55%, okay? 11.55% versus, that's an annual dividend. So that's versus the cost of the dividend of the QQQ, which I believe was at 0.52% or something like that. So again, this is another factor to consider for us dividend investors. For us dividend investors, this is another fact to consider, right? So if you're looking at this and you're like, the expense ratio is triple what it costs for QQQ. However, that dividend yield percentage is looking very, very, very attractive. Very, very attractive. So SPYI, again, is something that I would consider if you all are looking for an alternative to QQQ, because QQQ does cost around $530 a share. You just saw the price, $538 at the time of this recording. Lastly, if you drop down to the dividend charts right here, you can see that it's been a little jagged, right? But you do see the inevitable climb, which is always something that we love to see as dividend investors. But listen, that's the video. That's it. That's it, y'all. I just wanted to give y'all an alternative to invest in. I myself will probably be investing in SPYI. I'm changing up. I'm switching up my methods. SPYI is a lot more attractive to me just because of that dividend. And so I will be putting every day I will be investing into SPYI. And this will technically be day one, since the last time we did this video, I invested into QQQ. But starting today, Monday, December 16th of 2024, we will be investing every single day into SPYI, okay? You all take a look at this. Let me know what you think about it down in the comments. And listen, I'll see you all in the next one, all right? Later.